Okay, guys, I think we can start now. Even though the number is increasing, that's good, but we can start now. So guys, once again, welcome to Rally Trade Morning Market Review. So this is a session we get to analyze the market, give you reviews and previews, and of course, tips and tricks on how to navigate the market profitably. Once again, this is Rally Trade Morning Market Review. So this is a session, 1 solid hour of money market analysis, right? That cuts across currency pairs, that cuts across commodities, ranging from metals, precious metal, energies, and of course, agricultural produce, also indices. So this is a session we get to analyze the market for you, give you tips and tricks, of course, so that you can come out profitably on the markets. So once again, guys, welcome. This is Emmanuel Odogu, reaching you from the beautiful city of Port Harcourt. I hope all of us were doing okay. All right, now before we start, guys, once again, welcome. I hope your system and everything is ready for this solid market analysis we're going to look at this morning. Okay, I want to believe you guys can hear me. I want to believe you can hear me.
Yeah, we can hear you.
Thank you. I like that. All right, guys. Wow, the number is fast increasing. I like this, man. Now let's start with fundamental analysis. Okay. Now there are two major ways to analyze the market, as we all know it. Now this is for the newbies joining us. Two major ways to analyze the market. We have the fundamental analysis. Then we also have the technical analysis. Okay, so we'll dwell more on the technical side of things. Okay. But let's start with fundamental. Fundamental is where we get to see the events, right, that will unfold, right, across the different nations of the world. And of course, that's the currencies we trade. All right, now let's go straight to the website where we can view these fundamental events, right? And the website where we normally get the fundamental events is the popular one, forexfactory.com, right? Now, it's not good you have only one solution to a particular thing. So another website where you can get the fundamental event is investing.com. Investing.com. Another website where you can get fundamental events and news is tradingeconomics.com. So I've armed you with 3 different websites, right, where you can get it. Now let me share my screen so that we can get to do all of these. Okay. Let me share my screen. I've been able to share my screen, guys. Can you see my screen? I've been able to share my screen. Can you see my screen? Please, if you can see my screen, just type FF on the chat room. FF. Okay. Thank you. Thank you. Thank you. So guys, this is the forexfactory.com, right? So if it is hard for you to locate it or to get to this point, what you need to do is just open your browser at the address bar. You just type www.forexfactory.com. So you can equally use Trading Economics. Let me take you to that one. Trading Economics. I can see it up here, right, at the address bar, Trading Economics. So now this is another website where you can use. Once you're here, you just click on calendar. And of course, you can see the activities, right? You can see the activities, okay? Same thing, the time, the currency, okay? And of course, the caption, all of that. So let's go back to Forex Factory. Same thing here. So Forex Factory, we're on Forex Factory. So once you open Forex Factory, usually if you're opening for the first time, it shows you the news event for that particular day. Now it's going to show you the news event for the 19th of September, 2023, the blessed year of the Lord. All right. So if you want to see the news for the whole of the week, you're going to click this button up here. there is a button up here called calendar. Once you click calendar, it shows you the news for that particular week, which is best to do because I like to view the news for the whole of the week, right? So that I can prepare myself, guys. This week is going to be a bombshell. I can tell you that for free. It's going to be a bombshell. See now, 19 today. See, we have red hot news, red spicy news, right? On the Canadian dollar, guys, the Canadian dollar. And that will be by 1:30. And of course, that news is on their inflation, right? So you see the inflation news, it will come in form of CPI. CPI means consumer price index, right? Consumer price index. Okay. So we have different categories of consumer price index. We have the CPI, we have the median CPI, of course, we have the trim CPI, right? So this is their inflation. So Canada is about to give us record of their inflation, the inflation creeping into the economy, right? So of course, you know, if the inflation is increasing, it will prompt the central bank to increase their rates. Okay, central bank increasing their rates will mean a boost or an increase strength in the Canadian currency. So simply put, if this value increases or if the value is higher, if the actual so guys, we can continue. Sorry about that glitch there, okay? We can continue. I still believe you can hear me. Please indicate if you can hear me, guys. You can hear me. We are back. There was a network glitch there, but we are back in full force. Indicate if you can hear me, guys. No, right now you can hear me. Please check again. Check again. You can hear me. Okay, fine, fine. So we can continue. We can continue. So the CPI measures changes in the price of goods and services as purchased by the consumer, right? So we'll be expecting that news. So how do we trade this news for the newbies here? How do we trade this news for the newbies here? It means by 1:30 p.m. today, you want to look out for the actual here, right? So there will be a number here for the actual. Once that number is greater than this forecast, it means the value has increased, okay? So usually it's going to be in green color if it is greater than the forecast, okay? It's going to be in green color if it's greater than the forecast. Now, as for tomorrow, we also have a very powerful news. We have the CPI for the Great Britain there, okay? And of course, tomorrow again, we still have FOMC, another powerful news that will affect the United States dollar. So guys, let's hold a break here on the fundamental analysis, right? So please keep an eye on this news by 1:30. Keep an eye on this news by 1:30 p.m. for today, okay? Now let me switch over to my chart so that we can do technical analysis.
Something for body prepare itself all of them don't feel okay. And it's not actually now when you down on the drink and the phone, you know why show me down, you know why sometimes what way it goes.
Okay, I think we can just continue. I'm trying to meet everybody. I don't know. Keep going back. All right, let me switch over to my chart. So I've been able to switch over to my chart. Please indicate if you can see my chart, guys. Let me know if you can see my chart. Or you can just help me and just type chart if you can see my chart, guys. Type chart if you can see my chart. You can hear me, you can see my charts. Just type chart. Thank you guys. So let's run with full speed. So what we normally do is I normally like to start from the US index, right? I normally like to start from the US index. So the US index is actually a basket that measures the United States dollar with other major currencies like the pounds, the Japanese yen of this world, the Swiss franc, all of those strong currencies, okay? So it gives you the true strength of the United States dollars. I know most of our trades has a lot to do with the US dollar, okay? So this is how the US index looks like on the H4 time frame. Guys, what can you say? We are seeing a very powerful upward trend here. We are seeing an upward momentum here, right? Upward momentum, okay? And of course, this line I just drew now is called trend line. We are seeing a very powerful upward momentum here. I hope you actually took advantage of this upward momentum. Now, the kind of technical analysis we're doing here is called market structure, right? So market structure analysis. And in that market structure analysis, we try to look at impulse to the upside, right? For an upward trend, break of structure to the downside, impulse again to the upside, break of structure to the downside. I mean, the market keep giving us highs. The highs keep getting higher. And of course, the lows keep getting lower, okay? Over here, we saw a break of structure. And of course, I can see that break of structure is actually to tap in the external liquidity here, okay? So now this is like as if it was going down. So of course, it reverses immediately and then of course start going upward, okay? So the price of the chart of the US index is heavily going upward from what we can see on the chart. You know, there are two ways to trade. One, you can trade all of the news that is flying all around, right? I mean, all of those sentiments. The other way to trade is to trade what you see on the chart, right? The best way to trade is what you see on the chart. What we're seeing on the chart is the price is heavily going upward, right? Okay, so now I would like to go down to a lower time frame so that we can get more information, right? So on a much lower time frame for the US dollar for today, so one of the reasons why we like to analyze the US index is because once you know what is happening to the dollar, then you can tell what will happen to Euro USD. You can tell what will happen to GP USD, USD JPY, USD CAD. Why? Because they are all paired with the dollar, guys. So from what we are seeing right here, right, on this H4 time frame, I've been able to zoom in so that you can see clearly. This is upward momentum. How do I mean by upward momentum? See what I mean by upward momentum. There's an impulse to the upside, right? So this is the highest high we saw before it's retrace to the downside, right? Retrace to the downside. Then of course we saw another impulse again to the upside. This time around it should go higher than this high. We call it break of structure, break of structure. So actually it fulfilled that mandate, right? Because it tapped this the liquidity above this level here. Okay, so because we have the targeted liquidity here, that means the market has to tap that liquidity. Guys, see, this market moves in the direction of liquidity. I mean, by liquidity, I mean money. Money is what we call liquidity. So anywhere we have the money, that's where it moves. So on an upward trend, the target liquidity are usually placed above the highs. So the market has to go up, trade above the high, right? And of course, that's what you can use for your take profits, right? That's what you can use for your take profit levels, above the highs, because the market is made or is structured in such a way that it goes to take out the high. So it took out this high, guys, and of course gave us a new high, right? So this is where the concept of higher highs normally come from. Why? This high is not higher than this high. Why? The reason is because the targeted liquidity is here and the market took out the high. Guess what, sir? The protected liquidity is below the lows, right? So as long as the market keep pumping upward, as long as the market keep going upward, the market keeps protecting the liquidities below the lows, right? Of course, protecting liquidity below the lows so that it will not take out the lows, and of course, keep taking out the high. So in such way, the market keep giving us a structure that is going upward. Then, of course, after that break of structure to the upside, we normally expect a retracement. A retracement means the market has been overextended, right? So once it goes above this high, we call it has been overextended. So it will need to gather more momentum. How does the market gather more momentum? It needs more money. How does it need? How will more money be pumped in? More traders need to come in, guys. The market will have to retrace and give you a lower price, a cheaper price, so that you can jump in more with the buy. So what we normally do is we normally use this Fibonacci retracement. So drop from the low, right? Now this is a strong low. Why? It was this low that was responsible for taking out this high. Please, by taking out the high, I mean to break the high, okay? So to form a new high. So we'll draw something like this, right? So now let me zoom into the area very well so that you can see for yourself. I hope this is not too clumsy. You guys can see this, okay? Now, it broke this high, of course. Now, it retraced to give us a cheaper price. Now, see, it has traded below my 50%, my Fibonacci level of 50%. So once it trades below 50% and preferably below 61.8, guys, that's an area where we call points of interest. So that means it has given us a cheaper price. Get ready to buy more. So guys, there will be massive buys coming in here, okay? So if you watch carefully, you can see that this candle and this candle are both bullish, right? They're both bullish. So if you join these two candles together, you can see that they are actually these two candles. If you join these two, now this is H4, right? So if you join these two candles together, it becomes a come on now, that would be 8 hours, right? Of course, you know that would be 8 hours. Actually, on this on MT4 and then of course MT5, we don't have that, but of course, technically, if you join these two together, it becomes H8, right? So of course, then if you join these two together, you can see that it actually engulfs this candlestick, right? Okay. So that means there's an engulfing pattern here. So if you look even before that candle, you can see this bullish pin here. This bullish pin is also a bullish signal. So please, from everything I've been saying, I mean the market is gathering momentum around this area so that it can pump, of course, and of course it can impulse or rally to the upside, guys. Can rally to the upside. So we're expecting more rally on the dollar index, something like this on the upside. Guys, I hope we are all following. And I hope I'm not too fast. Are we following? Okay, please, if you're following, just type following, or you can type value if you're getting value from this. I hope I'm not too fast. No volume. We say no volume. I have volume here. Okay, you're following. Thank you. Thank you. Thank you, guys. You guys are wonderful. Come on. You guys are wonderful. All right, then. You're getting value, right? All right, guys, you're following. So I think let's leave the US index for now. We've been able to grasp what the message I'm trying to pass here, that there is still strength in the dollar, right? The dollar is trying to gather more momentum. It has gotten to our point of interest, the area where we want to feel like we can jump in more, okay? And that's the area where more traders would like to come in. You know, guys, trade is more of psychological than, of course, this of analysis, because If traders are looking at this area the same way I'm looking at this area, they'll be jumping with buys, right? And of course, that will increase the demand. Okay, of course, that's what it will. That's what will now push it upward. All right, guys, we've seen that. Now let's look at Euro USD. Let's start with Euro USD, guys. Euro USD. So on Euro USD, on the H4 time frame, let's do H4, please. This kind of analysis is a top-down analysis. I normally like to start from H4 time frame. So look at what the market is trying to communicate to us from the higher time frame perspective, right? Then, of course, after that, we now come down to our choice time frame, which is either the 15 minutes time frame or the 30 minutes time frame. Okay. So the reason why we like to look at the higher time frame is because so that we can get an idea what the big money is doing. I normally say the market is made up of big money and small money. I still believe you can hear me, guys, right? Oluwafemi, you're complaining of no sound. Others can hear me. So please check your network, please. Okay. Check your internet connection, please. Others can hear me. All right. Now let's look at what is happening here. This market, Euro USD has been dumping for some time now. Guys, you can see this. I hope you actually took advantage of this. So you can see this drop here, right? Right from July, this has been dropping, has been breaking structures to the downside, right? That's what we call downward trend. So is it going to stop? Yes, it's best to trade what you see on the chart than to anticipate. Most persons are already anticipating that the market is about to reverse, right? But on the H4 time frame, from what we are seeing on the chart, it's not reversing here. So what we're seeing here is only a retracement to the upside, right? A retracement is healthy. Retracement is good. Retracement is good business, of course, for the trend. Why? Because it gives it opportunity for more traders to see a cheaper price, right? For a buy, of course, then premium price for a sell. Premium price, I mean, is high price for a sell. Okay. Now, if the market is massively going down, of course, retracement to the upside is give you a higher price. Okay. So I'll do something like this very quick. So I'll drop from this high. This was the high, right? This is the highest high or the recent highest high that actually took out this low. Okay, this becomes our strong high. So that's what this software I'm using is calling verified resistance. Okay. So that's what the software is calling verified resistance at this area. So this is the high responsible for taking out this low. So until the market breaks this high, we are still going down. That's the mindset of the swing traders, right? Until the market trade above this high, we're still going down. So it means all of this area are playground for the price, right? So of course it gives you opportunity for you to enter the trade at a much higher price. Okay, please, you might want to just mute yourself. Okay, I've tried to mute everybody. Please help us. Okay, let me mute everybody again. Fine, thank you. But the sound is still there. Where is the sound coming from? So I will draw my feed from this high. So that's how to know the high to draw from, okay? The high that actually took out the low. So to this low. So you can see that this price has retraced significantly to the upside, right? It is yet to touch my 50%. So there is still rooms. Guys, there is still room. So there is still room for this price to retrace more into this area. Now, if you look carefully, there is a fair value gap here. There is an important area here where the price needs to fill. Okay, so of course, it coincides with what we're doing. So all of this area, this 50%, right? Even to this week, you can see this very weak here. Okay, so this price needs to trade above this area, trade into this area, right? So inside this area, we will not be expecting a reversal to the downside. Okay, so inside the area, we can hope to see some bearish signal, right, on the lower time frame, like 15 minutes time frame or 5 minutes time frame. Some bearish signal like bearish engulfing, like like inverted hammer, or we can hope to see what we call change of character inside here. Okay, so once you see that, then we can now start selling again from here. Okay, now on the lower time frame, 15 minutes time frame, Now that analysis I just finished on the H4 time, that's for the swing guys, okay? Now for those of us intraday traders, scalping technology, let's see what we can do here. So remember, we would like to sell, right? We would like to sell, okay? So from this 15 minutes time frame, we'll be hoping for the market to retrace a bit further into this verified resistance. So I would like to say, so a sell position will be envisaged at this area 1.06. So around this area 1.07020 to 1.06920. So around this area, this range of price, guys, I would like to do a sell, okay? So because this is actually a resistance. This is the first time it was resisted, second time, of course, third time. Okay, so around this area, let me drop a line there so they can see. So if the price come up around this area, guys, I would like to sell. Okay, so if the price trade a bit higher into this region, I would like to sell. Don't forget, selling Euro USD is actually a buy, right? It's buying. Selling Euro USD is buying the dollar. Okay, that's what we saw on the dollar index. Okay, so if you do that, your take profit, of course, for this scalping, or of course for this intraday, your take profit has to be on this level, right? On this level. So you're selling here, your take profit. You're selling here, your take profit has to be on this level, or your take profit can be on this other level here. So two levels, guys. So it's either your take profit is here. So it's either your take profit is here, right? This price 1.06740, or your take profit is 1.06559. Guys, don't forget, this is Zoom, but we are streaming this live on YouTube. Okay, so you can still watch this on YouTube, right? Or you can let's say you miss any of the session, you can just go back to YouTube, Rally Trade on YouTube, search for Rally Trade on YouTube. Then you can please do way to subscribe. Okay, and of course you can watch the recorded version there just in case you miss. Now of course the stop loss will have to be we can use a very good stop loss up here. Okay, up here. So we are buying, we are selling here. So we are waiting for actually the market to give us a more premium price, a higher price. The market should retrace a bit further to this area, then we do a buy. Now that's for Euro USD, GP USD very fast. We don't have time again. Okay, let's run very fast. So on the GP USD, please, I'll take your questions. Okay, but for now, so for the GP USD, we're equally seeing a massive movement to the downside, guys. So massively, this instrument is trading to the downside. So this is what we call downward trend, right? But if you notice, the market has been stalled for some time, right? The market has been testing this support here, right? So there's a support here. There is support here. So this is the first count. The first count of the support, the second count, the third count, the fourth count. So the market is actually testing this support, right? So leaving us with springs. Springs are just legs that can tap below the support area. Okay. So, but for now, from what we can see, the market is testing the support. So the price actually is on a support, right? And generally, what we do on the support, we don't like to sell on the support, right? We don't like to sell on the support. The reason is on the support, the market is massively trying to break the support, right? So you don't want to sell. You want to wait for the market to actually break the support. So on GP USD, if the price break the support, obviously we have been going downward. So if the price break the support, they want to start selling just below that area. So you don't want to sell immediately, right? So you want to wait for the market to give you a direction, right? You want to wait for the market to give you a direction. On this H1 time frame, you can see that the market has been printing some bullish pin here, right? Some bullish pin. Remember, the price is massively going down, downward trend, but we're seeing bullish pin. That seems to be like a conflict, right? That seems to be like a conflict, okay? So, but once it breaks this area, then of course we want to take our direction, right? So we want to take our trade. So you want to sell if the price can trade below 1.23621. So anywhere around this area, guys, 1.23621 to 1.235 0.70. So around this range, that simply means the price has taken out the lows, right? The price has taken out the lows. So if the price have taken out the lows, and of course, it will attract more sellers, okay, into the markets. But for now, you want to hold on. Then what about the bullish side of it? The bullish side is somehow because the market is heavily going down. So except we see a miracle on the market, I actually call it a miracle, because if the price can trade above this our local resistance here, then of course you may want to buy. That's a miracle. So if the price for today can do something like this, go above. Now this is a resistance here, right? So if the price can trade to this level, right, and of course break the level, right, of course after breaking the level, we hope to see a retest, right, a retest of that level. Then we may want to start buying. Okay, so if you buy, then of course the next level becomes your take profit. So from here you will target this other high here, this high. Remember, the market likes to trade above the highs. Okay, so you may want to target this high. So a buy can be envisaged around this area, 1.24050. Okay, around this area, guys. So I hope we are doing well. We are following. Okay. Then USD JPY, I saw something good on USD JPY yesterday. Okay, USD JPY. Now this would be the last currency we're going to look at before we jump into indices and of course commodities. Okay. Now on the H4 time frame, guys, on the H4 time frame. No, not again. So on the H4 time frame, what can we see here? Heavily, the market is trading to the upside, right? Market is trading to the upside. But if you look carefully, you will notice on the USD JPY, this market is stored at this on the H4 time frame, please. The market is stored at this area, right? So it's struggling to break this area. So that area is called verified or proven resistance, right? So it's going to break above this area, but it's still bullish. It's still bullish, very bullish. So on the lower time frame, that will be either H1 time frame, right? So let's use H1 time frame. So let me remove. Look at all of this. So all of this shows that the market is massively trading upward. Impulse to the upside, retracement to the downside, impulse to take out this high to the upside, retracement, being so careful not to take out this low, protected liquidity, right? So of course it remained here for some time. So from here we're expecting another impulse that will take out this high. So that means taking out this high is what we're expecting. Of course, you can see I have a trade here already. And of course, my take profits is at that areas, such that once it moves and take out this high, of course, it will be taking out my trade also. Okay. Now, where is the best place to jump into this trade, right? So there are two entries here. Okay, so I was hoping for it to retrace to this level. It did not, so I actually jumped in around this area as at yesterday. Okay, so you can see. Okay, so it gave good pips here, but it is retracing now. But my position is still open. Okay, why? Because my stop loss is still there. Okay, the price has not gotten towards my stop loss. It doesn't go towards my stop loss. So this is one of the ways to trade. If you place a trade, right, so you want to remain on the trade, right, until it gets your stop loss. That's how to show that you trust your analysis. Okay, you trust the analysis. All right, so what do you do here? So you use your Fibonacci and you draw from this low responsible for taking out this high, right? It was this low that took out this high. So you draw from this low to this high. This is the high we have seen, right? So if you watch carefully, So watch carefully. The price is here to tap into my 50%, right? So that means this signal is still valid, even though even when the price trade into this area, it's still valid. It's still valid. In fact, if it trades into this area, like I always do, I'm going to buy more. I'll buy more. I'll buy more. So one of the ways I do enter my trade, I enter my trade gradually, right? So I can enter some position. So if the price gives me a much cheaper price, right? What we call a much lower price. That means if it moves down lower, then I can enter more. Okay, I can enter more. All right, but the target is still here. So we are buying USJPY, guys. That's the meaning. So we are buying USJPY. So you don't want to buy immediately because seeing this massive candle to the downside, you don't want to buy. So where do you want to buy? So you want to buy around this area. So you want to buy around this area, okay? Why? This area has proven to be a local resistance here that was actually broken. So we are expecting a retest of that area. And of course, it's coincide with our Fibonacci. So around this area, that would be 147.492 to 1.7.427. So around this range, look at the far right, please. You'll see the prices in black and on red. So 147.492 to 147.427. So around this area, guys, you may want to take a buy. Okay, around this area. All right, now this for currency pair. Let's switch over to or maybe you have another currency pair you want us to analyze, or let's do good. Which of them now? Okay, somebody's asking. I can see you there. Chikeze. Nice name. Say, let's look at Euro JPY. Okay, fine. Let me honor your request. Now, Euro JPY quickly so that we can so let's do Euro JPY fast. Okay. So guys, this is Euro JPY. Don't worry, it will benefit you too, okay? So this is Euro JPY. Let's look at H4 time frame and see what we're seeing right here. So on the H4 time frame, what can we see here? So we saw the market testing this double bottom here, right? So it tested this double bottom here. So we now call that a verified support. But where is it coming from? It's coming from this high, right? So the market has been trading downward. As you can see, this is a high, this is the lower high, the higher, right? The high, the lower low rather, and of course the lower high. Okay, it gave us something we call an relatively equal lows. Yeah. And of course, relatively equal lows is actually a magnet, right? So of course, after that, the market came down forcefully to take out that low to form a new low. So from what we are doing right here, it means the market is on a downward trend. Once you start hearing lower low, lower high, that's a downward trend. But guess what? It moved up and trade. Now, if you look at this carefully, you will notice that this market traded above this high, right? So it tapped the liquidity here. So tapping the liquidity. So if you watch carefully, tapping this protected liquidity is the first sign that the market is about to go up. Okay. So the market has tapped this area. It's going to tap this area, but it did. So
YouTube went on.
So it's not supposed to tap this area, but it tapped this area. So that's the first sign, right? That's the first sign. That's the first sign the market is about to start trading upward. But after that, it came down, it gave us a relatively equal lows again, right? So the market, so from what we can see, right? So if you go down to a much lower time frame, you can see that this movement upward is already an impulse to the upside. By that, I mean on 30 minutes time frame, we're already seeing impulse to the upside, right? So we're already seeing impulse to the upside. So we might want to take advantage of that impulse to the upside right? Until it trade above the high. And of course, then we're not started going up. So something like this, as you can see, market is already trying to impulse to the upside. So what you can do here, if you're already having a buy trade, you may want to leave your trade open. You're already having a buy trade, you may want to leave your trade open. Okay. Now, but if you want to take a position, they want to take a position on this support. So you want to take a position on this support area, right? So the market is right now on this, is testing this resistance. So you want to do a buy above this area. So you don't want to buy immediately, okay? We want to do a buy above here. So if the price trade into this area 158.070, they want to buy. If the price trade into this area 158, so you want to buy. Otherwise, you want to wait. Waiting is trading, guys. You want to wait. You want to wait until the price do something like this. They want to buy it. Okay, want to buy it. So if you look at this carefully, you will notice the price is stylishly giving us a range, right? Okay, so these are the very first early signs of range. I mean, this is the upper band, upper band, upper band. So if the price trade towards this area, it becomes the lower side, right, or the lower band. So it's actually giving us a so these are the very early signs. So you wait. If the price trade to this level, they want to do a buy. So guys, let me switch over to let me do gold very fast. Let me do gold very fast. So you are asking for Rotimi, I can see you there. You're asking for the link to download the support and resistance. So please, I'll drop my number at the end so you can reach me at the end, okay? I'll drop my number at the end of this meeting or end of this session, so you can reach me for that. Thank you very much. Okay, that's for Rotimi, okay? Now, let's look at gold fast, gold instrument, gold. Now, on this gold instrument, so what can we see here on the H4 time frame, guys? Now, in the recent happenings, in the recent arm happenings, we saw gold breaking structures to the downside, right? And of course, in the same recent happening, gold has taken out. So in this same in recent time again, gold has taken out this high. Okay, now it for gold to take out this high, it means it has changed, right? We have a shift. The market have shifted to the upside. That's what it means, right? That's what it means. But it's not that very strong because we're already seeing enough strength in the dollar. So the gold can trade to the upside, but not very well because we're already seeing good strength in the dollar. Okay, we're already seeing good strength in dollar. So if you're a swing trader, you might not want to trade or hold gold for a long time going upward because it may not travel upward very well because we're already seeing the strength in the dollar. We're already seeing strength in the dollar. So what we can see here, we're already seeing impulse to the upside, of course, retracement to the downside. Right, so the next impulse again, it took out this high to the upside, right? So you can see this is already characteristics of an upward trend. Of course, so we are already seeing retracement to the downside here, as you can see. So this gold is trading upward. So let's go down to 15 minutes or 30 minutes time frame. Let's look at what we got here. So from what we are seeing right here, this instrument is trading upward also for the aggressive guys, but this is a local resistance. I wouldn't want to buy at this resistance, okay? Except we want to take the risks. Now, so we are seeing this trend line here. As you can see, the price has been following this trend line, right? So that means I would like to do a buy if gold can come back again towards this area, then I'll do a buy yet. I want to do a buy, but I'm just looking for a lower price, a cheaper price. If gold can come down towards this area, then I would like to do a buy. Okay, so around this area, I would like to do a buy. So a buy will be very nice around this area, 1931.42. 1931.40. So just a minute, please. So I would like to do a buy around this area, guys. 1931.42 around this area. So 1939.42, right? Otherwise, if the price break this high, because if you look carefully, it's testing the high, right? So let's do 15 minutes time frame so that we can see it more clearly. So if the price break this high, so that means my buy, that will be a buy stop, please. My buy will have to be somewhere at this area, right? So 1935.93. So I don't want to buy at the resistance, okay? So that I will not query myself and say, I actually place the buy at the resistance. So now the price has turned and start going down. No, you don't want to go through that sorry scenario, okay? So you want to wait, right? Now we are already seeing the first bullish, second bullish, third, fourth bullish, right? That alone is an impulse to the upside. That means there is momentum trading upward for this morning on gold, right? But the challenge is that the price is testing this resistance. So, testing that resistance means other traders will be thinking about selling, right? Selling at this resistance, but we don't want to sell, okay? So we want to buy. So we want to wait for that momentum to be strong enough to trade above this resistance, right? Or this barricade here. And of course, anywhere above here, I want to buy. So I want to buy again at 1935.95, okay? Now, however, if it respected this resistance and of course start trading backward towards this our trend line, guys, then I would like to do a buy here. So I want to buy gold for this morning, right? But I'm not doing an instant buy. So guess what? If you're already having a trade running, right? If you're already having a buy trade on gold, guys, you want to leave it open. Don't close it. So this analysis is not only for you to take a position. This analysis is also for you to either maintain your position or check out from your position. So the end goal is to make sure that you're good, you're profitable. Guys, once again, this is Rally Trade Morning Market Review for those of us just joining us, okay? And this is Emmanuel Odogu reaching you for the beautiful city of Port Harcourt. I hope you guys we are getting value from this analysis. But if you're not getting value, you can also indicate, okay, so that I can see how we can help you, okay? So at the end of the day, the end goal is to make sure that you do well, okay? So we are not just jumping in just anywhere. We want to trade where we have where we normally call points of interest. So okay, so where the money is hidden, where the money is stockpiled, okay? So we want to trade where other traders are likely going to start trading from. Okay? So that's what we do, guys. So the TP, of course, so let's look at this level. So if you're buying at this level, okay, your TP will have to be above this high. So this area, this same 1935, right, will have to be your TP. So if you're buying here, this same area will be your TP, okay? This area will be your TP. Why? Because we are looking at the price to take out this high. This price has to take out this high. You know why? The price has to take out this high. There is what we have here is a target liquidity. So the market is targeting this area. Okay. Of course, your stop loss has to be below this low. So your stop loss has to be below this low for a very tight close stop loss. Or for those of us that want to stay longer on the market, your stop loss can be below this other low here. Okay. So below this other low here, this low here, okay? I hope we are making sense, okay? Now let's look at USD 30, of course. After D30, we consider US 100. Okay, what about oil? Okay, let's do D30 first, okay? Guys, on D30, very powerful instrument here, and I like to trade this instrument, right? So what can we deduce from here? So the first thing you want to do once you open a chart, you want to make sense out of the chart, right? So you want the message, the direction, right? The information of what is happening on the chart to come straight to you. So from what we can see here is the price has been testing this area quite for some time. The price has been testing this area for some time, right? So it has been testing it to break through, but it cannot. So that means we we're having a huge, sell happening here, okay? Sorry, a huge buy happening here, right? A huge order waiting to buy or already buying here. And of course, it's that huge order that caused this gap to the upside. Cause this gap to the upside. From what we can see, remember the price was coming or has been trading downward, as you can see, right? So it's traded downward to this level. It could not go lower again. So that means there is a huge rejection, right? The market has been rejected. So if the market has been is rejecting this area, don't accept it by entering the sell at that area, okay? So wait for the market to give you direction. Now, from that rejection to prove or to show that the market has been rejected here, we saw impulse to the upside. Now that impulse could not even move very well. It has to gap. It actually gapped upward. So you can see this gap, right? So whenever we have gap like this, gap can be kind of weakened or force or momentum in that direction. So in this case, this would be force. So in this case, this will be forced to the upside. So usually when there is a gap, inefficiency is created, and of course the market will have to quickly fill in that area. So this is a fill of the gap. It filled the gap. Now, but let's not allow that gap to confuse us here. For what we have here, this is impulse to the upside, right? So this is how much it traded to the upside with our Fibonacci. So it has retraced very well. You can see it has gone below my 50%, right? My 50%. So this price may just likely start trading upward from here. So if it's starting upward from here, so so the target liquidity will be this high. So we might just be seeing something like this in the coming days. Okay. Why? The reason is it has filled in that gap. It has filled in that gap. So and it has traded just below my 50%, already tapping my 61.8, right? So it has it's already tapping my 61.8 level. Okay, so I have this moving average here. Okay, that's a 50 period EMA there, moving average. So I would like to do a buy inside this area. I would like to do a buy inside this area. Now, see, if you're buying here, that's a very risky way to trade. Remember, there are two ways to trade. One is to be aggressive. The other one is to be conservative, okay? Aggressive to make money, conservative to save money. You need the two, guys. So sometimes you need to be aggressive. Following this analysis, the market has gapped up. It has retraced, okay? So we are looking out for more movement, more impulse to the upside. Now, but you don't just jump in immediately. Let's wait for some fair enough bullish sign. By bullish sign, I mean this bullish candlestick on this H4 time frame should actually give us a sign. Remember, this candlestick have not closed, right? And of course, this candlestick can close in any color. You're already seeing blue. Blue is my bullish candlestick. It doesn't mean that it will end up as blue, okay? So you want to wait for a clear signal. The clear signal means if this candlestick closes as a bullish candlestick, that can be either a hammer or even any of the pin bar, bullish pin bar, I mean, right? By bullish pin bar, I mean a very small body and of course a very long lower tail or shadow. Okay, so once that happens, right, so we look out for the next candle. Then for the next candle, we can now start taking our buy trade. So guys, you want to wait on the H4 time frame. You want to wait. So after that, so once you see a bullish sign there, right, a bullish candlestick, then you drop down quickly to either 30 minutes or 15 minutes time frame to look at for your trade. Okay, so this is 15 minutes time frame. So once you see a bullish candlestick, so once that candlestick close as bullish, guys, don't forget. So probably it can close as bullish. Now on this 15 minutes time frame, lower time frame, we're already seeing a verified resistance here. So possibly it can close as bullish, right, and trade up and up and up towards this level. So it can close bullish by trading up towards this level. Then of course, then the next candlestick that opens on that H4 time frame, you drop down to 15 minutes time frame, right? Then you may start buying from up here. Sorry, please. You may start buying from up here. So remember, don't forget the signal. Now, see, even on this 15 minutes time frame, we are already seeing, we have seen the first change of character because this is a high. Now look at this carefully, please. Look at this carefully. This is a high, this is a low, right? Now this is a lower high, and of course this is a lower low. That's movement to the downside. You will agree with me, right? And of course, this again is a high, right? Then of course this is a lower low. This is what you do to make sense, right? To make sense of what the market is doing. So this is a lower low. So these are signs that the market is going down. But guess what? We have seen a change of character. I mean, look at this price push up and trade above this high, and also it traded above this high and also traded above this high. So that's impulse to the upside. We call it break change of character. Okay, that's a shift. So on the 15 minutes time frame, guys, right? On the 15 minutes time frame, the market has already shifted, right? It have shifted, okay, because it have traded above this high. Now guess what? Again, now it retraced again to the downside, right? So right now we're expecting another move again to the upside. So another move again to trade above this high. That's already what we are looking for. So, but we want this to be confirmed on the H4 time frame. Okay. So once that H4 time frame closes, don't forget, guys, you can make enough money from this signal. So once that time frame closes, once the H4 time frame on D30 closes as bullish, right? Then you want to come to 15 minutes time frame and start buying. Okay, start buying. We are not selling it for now. Okay, so we are only going to consider selling if the price. We are only going to consider selling if the price can trade and take out this low. Take out this low. Take out this low. This is the lowest low we are seeing. So if the price can trade down and take out this low, that's what we can now consider selling. But for now, guys, we are buying. We are buying. We are buying. Don't forget, on the H1 time frame, we saw a gap up. A gap up means a bullish. It means bullish. It means momentum to the upside. So that's for D30, guys. So that means for now, you may want to wait until all of this plays out. It's called mechanical trading, okay? Mechanical trading, which means you may want to wait until you see A or B plays out before you can now finally fake your trade, okay? Now that's for D30. Please, we'll be able to shed light on that. What about US 100? Well, now let's do US 100 because we have a lot of traders on US 100, okay? The majority of my traders, most of them are on US 100. So let's shed some light here, okay? You know, the Holy Scripture said, "Let there be light." Guys, now from what we are seeing right here, we are seeing, let's make sense out of it. So this market trade or move above this high to form a new high, right? So this is how you make some sense. You throw light on it. It gave us a low. Guess what? It gave us a new high. Now, please, it's not that I'm leaving out all of this level. These are called internal structures, okay? That will not permit us to look into that. So as you can see, this high is higher than this high. So it means on the H4 time frame on US, it means the H4 time frame on US 100 is bullish. So you can categorically say that because that's how you trade, by categorically saying the price is either bullish or bearish. Okay. Now we call that directional bias. Okay, so you will need to have a bias. Now see, let me use my fib and draw from this low, right, to this high. So you can see that the price has retraced very well, right? It has even gone below 61.8%. So same thing with the DE30. So we'll be expecting a movement to trade above this high, okay, to continue the upward momentum. Right, we're expecting this now, but let me zoom into the area very well. Right, so but I don't like the kind of candlestick I'm seeing here. They are choppy candlestick. I need to see strength being pumped into the market from here. Okay, so if this candlestick again closes as bullish, preferably it should be big enough to engulf both this red and this other red, right? So it should be big enough to engulf these two red. Then I would like to start doing my buys. So I'll drop to 15 minutes time. But please don't forget, the candlestick should be big enough to engulf this candlestick and this candlestick, okay? Now, all of these are just narrow trading. I don't like narrow trading. Narrow trading means more volume. It's not being pumped into the market. I know technical analysis is more on volume and of course, price with open interest. So we will need to see volume in our direction. So I'll drop to 15 minutes time frame. Then of course, on the 15 minutes time frame, I would like to take my trade. Now, I'm not trading immediately on this US 100. I would like to see on the H4 time frame. I would like to see on the H4 time frame. So on the H4 time frame, I would like to see this candlestick, right, close as bullish, right? So once this candlestick close as bullish, then of course I would like to start doing my buy. Guys, take note. So you want to use this as part of your watch list. I am watching US 100. I'm watching the US 100 on H4 time frame. Once that candlestick closes as a bullish candlestick, right, and it's big enough to engulf, by engulf I mean to cover this red candlestick, right? This candlestick 1 and of course candlestick 2. This one that is forming now is called candlestick 0. So the candlestick 0 should be big enough to cover the candlestick 1 and of course candlestick 2. Then I'll drop down to 15 minutes time frame. Guys, I hope we are getting this. Drop down to 15 minutes time frame. Then of course, as at that time, if it's big enough to cover the candlestick 1 and of course candlestick 2, as at that time, it should have taken out this area. I should have traded a little bit up to this area. Then I would like to start buying just above this area. It's okay. I'd like to start buying above this area. So if I'm buying above that area, and of course my stop loss, let me okay, my stop loss will have
No sound.
So guys, sorry about that
No
glitch.
sound.
Sorry about that glitch. I think we are back now. I'm sure you can hear me. So let's just round up. It's already past 9. I hope you actually got some insights, and of course some value from that. So we are back, right?
Wow.
Okay, guys, it's already 9, so let me drop my number 09026264507. So please, you can reach me. This is Emmanuel Odogu. Emmanuel Odogu. So guys, that's my number there. That's my number there. Please, you can reach me. And of course, I'll be glad to receive your calls. So let's draw the curtain here. Please join us again for another exciting analysis again. Please, just in case I was too fast, please, you can.
Please, your number again, please. Your number again.
I've dropped the number already. Check the number at the chat room. You'll see it. 090262645. Just check the chat room. You'll see it.
You didn't give us straight hints on US 100.
I've done US 100, please. I did US 100. So 09026264507. That's the number, guys.
Thank you. We got value. We got value today.
All right. Thank you. I'm so glad to hear that. Guys, thank you very much. Please join us again tomorrow, same time, 8 a.m. for now. Solid money market analysis. And of course, make sure you trade profitably, okay? Thank you, guys. Bye for now.